Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is May 22nd, 2012. We have a lot to talk about, so let's get started. This is a chart of the SPY, which is the ETF that follows or tracks the S&P 500. We had this down move here, and then we bounced off of this mathematically calculated level, and then now we're having a bounce up. Now, a lot of people are looking at this doji candle here and saying, oh, are we going to bounce off of this resistance point already? Well, if you take a look at this, we're at a gap window because we're coming back up, and there is a possibility that we may bounce off just a little bit. I don't think we're going to bounce off a lot, but there is a possibility, being that, like I said in the previous videos, you have to be really careful if you're going to be bullish in this market, because it's going to be obviously a counter trend trade. And whenever you're doing a counter trend trade, like I said in my previous videos, you're taking a higher risk, and you don't want to do that. You want to put the odds in your favor. So if you're going to take a high risk counter trend trade, what you want to do is you want to get in and out as fast as possible. So if you got in the day before Friday, and then we had the spike on Monday, and now we're having a doji candle on Tuesday, the chances are most people got out of the market because they don't want to take the chance of the market pulling back so soon. If you look at the volume here, I like the volume that it's higher than yesterday, but again, I like to see at least 3 days of lower volume and then a spike in volume with a doji candle that indicates, exhaustion. Okay. In my opinion, that is when I would take the trade short. Now, technically speaking, because we're in a downtrend, I'm thinking, in my opinion, that we're going to stay in a downtrend for a while. You could actually take the trade here already, and even if it does go up into this level, eventually we're going to have a large drop down, probably into this level here. Okay. However, nothing's guaranteed in this market, so you also just want to be very, very careful. If you want to short here, well, in my opinion, I'll just leave it at that. In my opinion, I will not short here. Okay, for me, I'm gonna wait until we reach this level here. My levels hasn't been really hit, as you will see in the GLD, but they're getting close. I mean, I need to at least be at least a pretty good resistance point, like say something around here for me to short, and then any close above here that would stop myself out. But we're not even there yet. We created this doji candle after just 1 day. This does indicate an indecision, so it is possible that we may reverse back down. But let's just say we do reverse back down tomorrow, or we come a little lower. This is still, no matter how you look at it, a bearish consolidation pattern for another drop down. Okay, so whether or not we get up to this 135.72 level doesn't really matter to me. It's still a bearish consolidation pattern. The question is, when is it going to break? Okay. Now let's take a look at the US dollar. Okay, so we have this resistance point here that we had this line here from the previous videos. We came all the way up into this line. We actually, I should delete this line. We came all the way up to this line, and then we pulled back. Now today we're back into this line. This candle here is actually in the after hours, so we're back into this line again, and so the question is, are we going to pull back once again, or are we going to break through, in which case we'll be hitting this resistance point here. Now if we break through and we hit this resistance point here, then chances are the markets will continue lower. Okay, so what's going to validate this? Well, if we pull back here and the markets go higher, then let's take a look at the VIX. This is a chart of the VIX. If we do pull back on the dollar, then markets go higher. However, the VIX is getting a bounce off this 20 moving average, which means increase of fear. Okay, so what that tells me is, I don't necessarily, in my opinion, think that there's going to be a reversal tomorrow. Okay, however, I do see, okay, interestingly enough, the E-mini futures are down over 6 points. All right, and gold is down over 17 points on the gold futures. So as of now, it really depends on Europe, when the Europe markets open. But as of now, as making this video, it doesn't look too good for tomorrow. It looks like we're gonna actually pull back a little bit more tomorrow. But again, I gotta read the charts, and the charts is telling me right now that if we get a spike in the VIX, fear is gonna increase, and then we're gonna drop tomorrow. However, the dollar, if we get a bounce off the dollar, then we're obviously looking at a different picture. Now, if we break through here, which is a possibility because we already had a bounce off of this resistance point here, so it wouldn't surprise me that we do break through here. If the dollar does break through this level, however, then the markets should be coming back down pretty fast. Okay. This is a chart of Apple. Apple in yesterday's video, if you just take a look at yesterday's video, I said we're going to get a resistance here, and we're also going to get resistance at the 50 moving average. If you take a look at it, that's exactly what we did. We went right into this trend line. You see this, if you look at the previous video, which is yesterday's video, this trend line was already here. I did not move it, I did not touch it, and if you look, let's kind of just zoom in here. Apple went right into this trend line, right into the 20 moving average, and then had a nice clean bounce right off of that, and then the candle looks small, but if you look at the actual price, the high of this candle was 573.88 and the low was 552.58. So that's a huge drop within one day if you had shorted Apple at this level here. Okay, so that's Apple. Alright, so I know in the last previous video I talked about JP Morgan. JP Morgan obviously didn't get to my calculated level like I wanted it to. It bounced off of this support line here. And in the previous video I said there is a very high possibility that we will bounce off of that, but I would like it to come down here. So I obviously missed this trade. We had a nice bounce in JP Morgan today. So we have a resistance point here, and we also have a resistance point at the 200 moving average for JP Morgan. So we need to keep an eye on that before we reshort it, okay? This is the daily chart of gold, or the GOD, which is the ETF that tracks gold. We came all the way down into this calculated level. I entered a long position in gold. I got out at this level here because it was a counter trend trade. Gold continued higher. I was going to reshort gold at this level. However, it looks like gold had already turned over. Okay, so now the question is, where is gold going to go? Well, right now gold is not merely making a very good pattern. I mean, it's possible that gold may actually trade sideways. Okay, so that is a possibility. Another possibility is gold, because we already came back, this is technically a pullback here after this long down move. There is a possibility that we come down again and then break through here. However, we are going to have some resistance, some support here before we break through. But if we can break through this level, actually this green level here, but this mathematical calculated level, if we can break down through there, I don't have a level in for gold on the bottom and didn't calculate it yet, but we expect gold to go a lot lower. Okay, so gold going all the way up here is probably right now, from what I'm seeing in the charts, not likely. Okay, the GLD could also come down into, let's see, come down here and then try trade sideways a little bit, right? Kind of consolidate first before coming down. So what is my plan for gold? Well, right now the move has already come down, so if I entered short, I'd be chasing, just like I caught gold down here, entered long. However, if I didn't enter long and then this candle was already created, I'd be chasing, and then right now I'd be losing money. That's why you don't want to chase, and that's why in the previous videos I constantly say it's a counter trend trade, so you have to be careful. If you don't catch it at the bottom, you don't want to chase, and if you chase, you're gonna get stuck, because now people are kind of thinking to themselves, are the markets going to turn over? I mean, that doji candle on little higher volume doesn't look so good. I mean, but they entered long after the long yesterday, and that's why chasing is just a bad thing. And because gold had already turned over, if I enter here, it'd be chasing. So what I need to see first is some sort of consolidation pattern before I enter, because because there's a possibility that gold can just shoot right back up tomorrow. The gold futures doesn't look that way, but if we come into this level, I think intraday will probably get a bounce, but then I think gold's going to come right back down here. What I need to do is wait for consolidation or a pullback in gold first before I reshort it. Okay, so that's the plan for gold. And we're just about out of time. This is your 7-minute market update. God bless you all. Thank you for watching. We'll see you in the next video. Actually, I'm just going to go a little bit over my time here because there's a lot of talk about Facebook. We're in the third day here. I do have a mathematical calculated level for Facebook. Now, these aren't going to be guaranteed because I've never done mathematical calculations on only 3 days of data. Okay. However, I was able to find enough, hopefully enough, and the first mathematically calculated level was $30.97, and looks like it's already into that. Okay, let's take a look at the half an hour here. Looks like it's already in the first level. Okay, as perfect as that is, that's pretty awesome. So we also have this level here that Facebook could go into, and then this level here that Facebook could go into before having a bounce. Again, this is going to be very, very high risk because there's not very much data to go off of. Mathematical calculations need to have some time involved before it can calculate appropriate numbers. But right now, I mean, if Facebook can get to 26.18, I may actually take a small position and go long on Facebook just for a short-term spike. Okay, but we'll see. We'll keep an eye on this and see how valid these mathematical calculations are. If we get a bounce here, or if we get a bounce here, or a bounce here, then that'll validate that these mathematical calculations will also work for IPOs. Alright, well, thank you very much for watching, and I'll see you in the next video.